I've got life insurance through work. I don't need any more, do I? That's going to be our topic on today's episode of Friends Talk Financial Planning. Hi, I'm John Scherer, and I run a fee-only financial planning practice in Middleton, Wisconsin.
And I'm Bridget Sullivan-Ramel. I've got a fee-only financial planning practice in Chicago, Illinois. Before we go further, please subscribe. It helps our channel. It helps us reach more people. So, John, you talk to people about life insurance all the time. And we're different because we're not selling life insurance. We're just looking at people's life insurance to try to help them analyze it. So what do you tell people about life insurance?
Yeah, no, it's, most people haven't had somebody take a look at their insurance that's not trying to sell them more insurance, basically, right? And so it's sort of like, hey, here's these things. And we talk in our office a lot about, here's some ideas to take back to your agent and some ways to think about this and how do we think through it? So, one of the questions that we just presented is I got coverage through work. I'm all taken care of. Well, let's take a look and what that is. And, yeah, exactly. And so it's individual. Of course, we can't give advice here, right? It's individual for everybody, but a good sort of rule of thumb to say, hey, am I in the ballpark? I think anyway, is to say, take your income, whatever you make before taxes, what's your salary, and somewhere between 8 and 12 times that. 10 times that's right in the middle, 10 times your income, at least it's in the ballpark, right? For most people. And, when you do the math on that, that can be a lot of money, right? And you think, well, wait a minute, that's, I don't want to be worth more dead than I am alive. But so anyway, that I think is a range that we talk about for folks.
And the people who need it are people who have young kids, for sure.
Yeah, that's the big one.
And definitely, and probably if you have a dependent spouse, or a
right.
partially dependent spouse, you're making more money than your spouse.
That's right. And we talk about this.
You want to help them through some humps if you do pass away. So I pass away and I want them to be able to pay off the house or just have a bunch of money. It doesn't have to necessarily solve every potential problem, but it would just be a help.
And we address this with all of our clients, whether they're 30 or 75, right? We take a look at this. And for people, obviously, in that 30-ish age demographic, right? That's more typically, golly, we got a young family we got to protect. For our older clients, we talk about it and just exactly what you said. When you get to a certain point in life, you probably don't need any more life insurance. But then when you're at that point, oftentimes your kids are in that position where they might need some life insurance, and to help them think through these things, I think it's just good information for everybody to know about.
And I think a lot of parents that I talk to are trying to help their kids adult.
Yeah, right.
That's what they call it these days, adulting. And, geez, I need to adult myself a lot of times. So I'm not just putting it on the 25-year-olds. But I would say that a big blind spot that people have that I've seen is understanding their kids need that young parents with young kids need life insurance. And they probably need more than what's available just at work.
Well, and that's the other thing to circle back on, right? You say, okay, we sort of have this 10 times sort of idea, right? But so what does that mean? So circling back to, hey, I got coverage through work, right? And so to take a look, we look at, I'm sure you do too, right? Look at the benefits. What is it actually? Oh, you have 1 time salary, 2 times, 5 times, probably number one, not enough that's available through work, right? But number two, the other thing about insurance that's through work on the life insurance side anyway, is that the insurance company owns and controls that. They can decide to raise rates. They can decide to stop offering coverage. What if you take a different job, and if your health has changed, right? You find out in your 30s or something that you've got some kind of crazy cancer or whatever. And now I go, geez, I'd like to take this other job, but and I've got some sort of compromised health. I might not be able to get insurance. What if this new startup company I want to work for doesn't offer life insurance? And golly, I got this thing that, that I want to have coverage, and maybe my life expectancy is compromised. Right. But when you buy a policy directly through an agent or through a company, you control that. The company can't change those policies almost across the board unless you stop paying premiums. So you've got that portability too, which, if it's, listen, I can get coverage through work and I can get coverage on my own if they're about the same price. Having that control over it can be a really big deal that, again, people don't often think about when they're just looking, hey, I'm signing up for benefits at work sort of a thing.
Yeah, and so John, you worked in the life insurance industry for time before you were a financial planner. So you have a breadth of experience about it. So tell me stories about when you've had a client with life insurance or not enough life insurance or too much life insurance, et cetera. What's your experience with that?
Yeah, it's interesting that we'd find a lot of people that so here's one of the examples that I give to people. We talk about it all the time is that, geez, I need $1 million. I need, that much insurance. And the idea, I don't want to be worth more dead than I'm alive.
Right.
And $1 million is a lot of money if you win it in the lottery, but it's not a lot of money when you've got to raise two kids for the next 18 years as a single parent, right? And your primary partner in life, right? The parent of your spouse and the parent of your kids is gone, right? So part of it is it's not just an economic decision of, well, and here one in Wisconsin, here up in Madison on campus, about 30 or so years ago, the head football coach had a heart attack and died back in the 1980s. And I've been at seminars or workshops where his wife had spoken about, we had, enough, I could take care of the kids and these sort of things, but the emotional aspect of losing your spouse, right? Do you want to continue to work? And oftentimes we'll have people, one person, we just have a newer client, and she's an attorney and makes most of the money in the family. He works part-time and, takes care of the kids, sort of a thing. Well, geez, his income contribution to the family isn't great, right? You do the 10 times his income and it's a pretty low number. But one of the things to consider is for her saying, listen, if he gets in a car wreck and is gone tomorrow, right? That's how this stuff happens. Are you going to continue to work your same schedule? Are you going to continue to do those things? I mean, if you have a stay-at-home parent in this example, one of the reasons is so that somebody takes the kids to their soccer practice and piano lessons, and that somebody's around oftentimes, right, for their individual situation. If your spouse isn't there, are you going to want to be working your, 40, 50, 60-hour work weeks, those sorts of things? Or so maybe some of that protection is for the working spouse, right? Kind of counterintuitive, but the real life part of it, it's not just like some other things. Here's our math equation. If you think about your spouse, it doesn't come home one day, and what that means and how that might affect you, and for a relatively low cost, having enough coverage. We always tell people, err on the high side. You don't want to pay too much and have all kinds of crazy insurance, but you sure the heck don't want to have that kind of horrible surprise and then be forced to continue to go and do things like work that you really don't want to do. So
Absolutely. And I think you bring up a good point too, and I just want to state it explicitly, is that it makes sense, even if somebody's not the primary caregiver or primary earner, it makes sense to have insurance on them anyway, because if they're gone, you're going to have to pay to replace that somehow. Either you quit your job or work less and do those household activities, or you hire somebody else to do them. And like you said, you're not going to be in an emotional state that is going to be, or for most people anyway, death of a spouse does not increase their emotional capacity and ability to deal with things. It's not like, okay, now I'm going to get into action. It's like, no, you need time to grieve and deal with there's a lot coming at you at that point.
That's right. And what you just brought up a great point is I'll have people that'll say, well, the stay-at-home spouse, we could hire a nanny or fill in the, we can, pay, and that's a relatively low cost in the big scheme of things to have, listen, I'm making several $100,000 a year as a, doing this, and, or, I can pay somebody $2,000 a month to come in and do these, some of that sort of thought process, which is true. But is that, like I said, so yeah, I get that, but is that really what you want? You want somebody else doing these things? And maybe the answer is, yeah, it's just fine. But that other side, that personal and what, as you described, that emotional side of things, you don't get, I love that, you don't get more emotional bandwidth after losing a spouse, right? When you think about that, you go, oh, yeah, right. It's not a math equation. One other thing that we'll have people bring up is that through benefits at work, well, we got this accidental death and dismemberment policy, AD&D, right? I've got this insurance and that's, a whole bunch of coverage. And, why do I need to get other, individual type coverage? And so my response to that is that, listen, if you're in a car wreck and you die and your family needs this money to live on, how is it any different than if you find out you got some kind of crazy cancer or you have a heart attack, right? If you need to protect your family, those accidental policies, the cost is tiny, and there's a reason for that, right? Because the payouts don't often happen, right? So just get enough coverage as a base, not these specialty type coverages, which it sounds appealing, but when the rubber meets the road, it's like get your own coverage that you can control. One other quick story on it, Bridget, is we have a client, and have covered small family, these sorts of things, and found out that he did have some cancer. And fortunately, everything worked out really well for him. But it was at a time when he was looking at making a change and starting a business, right? And you're going, listen, I'm going to go out here, and it's I can, and if something happens to me, we need to have coverage. And if you didn't have individual coverage, I mean, there's no way he can't get insurance now. Right. And somebody who was a relatively young person can't get coverage. Right. So if he hadn't purchased insurance when he was, as an employee, done it on his own, making a move to running a business, it would have been a big stumbling block. Right. And so when you think about those things, it doesn't, does it come up often? No, but when it does, and for this low cost to be able to protect against that, it's really an important thing to consider.
Right, so it seems like that's a good point to wrap it up. I'm Bridget Sullivan Mermel, and I have a family financial planning practice in Chicago, Illinois. And I'm with John Scherer, who's got a family financial planning practice in Middleton, Wisconsin. And we're both proud members of ACP, or the Alliance of Comprehensive Planners.
That's right. And if you like the things that we talk about on the show and would like to find an advisor who thinks like us, visit acplanners.org to find an advisor in your area. And don't forget to hit that subscribe button.